Good day, guys. Um, Today I'm gonna be showing you a little more when it comes to like this trends and everything. See, so now I'm gonna teach you guys. I'll first be teaching us about the flags, or basically they're just ascending and descending. Understand? So it's more of a ascending and descending channels. Yeah, that's what I'll be teaching you guys today. See, so flex. When you talk about flex, I'm talking about something like this. The market will be something like this. It do something like this. So something like this kind of movement, we can consider it as a flag. Understand? So same thing going upwards. It can be the reversal of this. It can be the same thing. So we have the same movement. Understand? So you're gonna have like a chart moving some like this between your support, a resistance, something like this, then it breaks out. But most of the time, you're most likely to have like only 3 touches. Understand? So you're most likely to have like only 3 touches, then before the breakout, before it breaks out. Same thing with this. So these flags are known for reversals. These ones are known for reversals. You see, it's something like this. They are known for reversals. So these ones are known for reversals. Yeah. So I'm gonna look for something like that in the market. Let me use each 4. So I advise you guys to use like each 4 time frames. Whenever you start to analyze, make sure you use each 4 times frames. Make sure you use each 4 time frame. So let me try to look for a flag real quick. Yeah, let's take this one. Yeah, let's delete all this first. As you can see, we kind of had a flag here. You can also see the downtrend, but it's a flag. Nevertheless, it's a flag. You understand? Nevertheless, it's the flag. Breakout, retest, boom, full reversal. Understand? Let me look for another one. Let me look for another one. The chart is still loading, but I think you get the idea of what I'm trying to say. I think you get the idea. Hopefully, yeah. That's right. They won't always be perfect, but you have to spot them. Regardless, you have to spot them. They won't always be perfect, but as you can see, something of this nature. We have this kind of something of this nature here. We had a what we call a curve, a force breakout. Understand? So we had a curve here, a force breakout. So that's what a curve are for. Like you had a curve. You understand? You had a curve here. There's a false breakout. This thing was a false breakout because it went back into the trend. Understand? But it still respected the trend regardless of the movement happening. But like I said, you most likely to have like 3 touches: 1, 2, 3, breakout, retest, boom. Understand? So these are the kind of things I'm talking about. So you must like to have this kind of things happening. This is the first touch. The second touch. Then you had the third touch. Understand? So you have 1, 2, 3 touches. Then boom, the market went out. It broke out, came for a retest same time. If you had to drop like the smaller time frames, like let's take let's say 1 hour. Wait. Let's take 1 hour. Let's take 1 hour. Let's take 1 hour. You are most likely to have like, let's look at the chart. Wait, the chart is still loading. I'll show now. It's 2 hours this one. Let's look for 1 hour. Yeah. But you will see that it came for a retest, then it pushed back up. Understand? So that's how like you can take the trade. You can take a trade on the third touch, or if you feel like it is already you've already missed the trade, you can wait for the breakout, the retest. Always the retest is the most like 100%. The retest is always like the best time to enter a trade. Understand? So the market is taking longer. I think it's the network. I think it's the network now. So yeah, like I said, let's take a closer look at this. See what I was talking about. It came for a retest. Then you are out to buy somewhere here. Even if you would have bought here, it would have been fine. But as you can see, let's say you took a trade here at this point, you took a buy, stop loss here, somewhere here, or you can risk at least 20% of your account. Understand? But it shouldn't be far, like really far. You can maybe like understand. So somewhere there, see, you got the full movement of the trade. You got the full movement of the trade. You see, boom, the full reversal to the upside. So that's how like you are out to see it. But there's also some of the ways you can look into this. There's what we call head and shoulders. Understand? So head and shoulders, you are out to have something like this. That's the shoulder, left shoulder, then the head, then the second shoulder, then boom, the market goes down. Understand? So that's how head and shoulders is you are most likely to see. But you can also have the inverse, more like the reversal head and shoulder, like something like this, going down the head, the right shoulder. You see, then you have the market going up, boom. Understand? So we have this kind of things. Like if you have to take a look here, and the same thing, we do have the same thing. We have the left shoulder, the head, the right shoulder, then boom, the market went up. You see? That's how like this is the inverse of the one that let me look for example for the one that is upright. Yeah. Yeah, let's take a look at this one. Yeah, this one is perfect. Yeah, we have the left shoulder, the head, the right shoulder. You can say you can put it here because they at the same price. Then boom, the market went down. Understand? They won't always be perfect, but you should be able to see them. Understand? So these are the kind of things you should look at for in the market. But back to the flex, like I was telling you, this flex, remember, I said there are different types of flex. The ones I'm showing you now, they're the ones they're the ones responsible for reversals. Understand? So you are most likely to spot reversals with them. Understand? Let me try to look for one. Also somewhere here, I think. Yeah. Let's take a look at this one here. Take a look at this one here. You have a flag. The market came from the down below. 1, 2, 3 touches. Boom. Understand? These are the kind of things like that's what's happening on the market. Understand? These are the kind of things you should be able to see. They won't, like I said, they won't always be pretty like clearer to the way I'm showing them, but you can see that that's exactly what I'm talking about. So if you were to drop to smaller time frames, you would have maybe got the trade somewhere here, because here we have the flag. So this one is responsible for the reversal. So it made a full reversal. You took your profits, you out. Understand? So same applies. Let's look for one. Yeah, check this one also here. This one also here. You will see clearly. This one you will be able to see clearly on a smaller time frame, but the same thing. Same thing. The market came 1, 2, 3, boom, up, came back, gone. Understand? So they ain't always pretty, but I think you get the idea of what I'm trying to say. Let's see, 1, 2, 3 touches, then boom. Understand? So it's most likely this kind of things. So now I'm gonna show you the other ones the ones that are responsible for what is this? The ones that are responsible for continuation, trend continuation. Understand? So let's say we have like more of a let's look for a downtrend movement. Let's say we have a downtrend movement. Let's look for a downtrend. I think yeah, this might do. Yeah, this might do something like this. Something like this. Let's say we have a downtrend, something like this. Now, the ones those are responsible for the ones responsible for continuation, it will be something like this. Then it makes this kind of movement on making a smaller uptrend, something like this. Then what's ought to happen in this situation is it will break out, then continue with the bigger trend. Understand? It breaks out, continues down to the downside. Do the same thing again, boom. Same thing. Understand? So that's the kind of movement you can expect from the ones that are responsible for continuation of trends. Understand? The ones responsible for continuation is this kind of thing happening on the market. Now let's look for one. See, we do have one here. We have one here. Breakout, retest, boom, to the downside. Same thing happening. Understand? Same thing happening. You can even get smaller ones. You can either get major ones. Understand? So you have this thing happening regularly. So it shows that there's a continuation of the downtrend. So we are to continue with the bigger movement. Understand? So on a smaller time frames like H1, M30, you'll see this movement clearly. So these are the kind of trades you can take easily. Understand? These are the kind of trades you can take easily. These are the kind of trades you can take easily with no hassle at all. Understand? So you can take these trades easily. What's happening now? These are the kind of trades you can take super easily, like very easily. It shows you there's a continuation of the movement. Understand? Same thing happening here. You see a major drop, a little bit of uptrend, boom, same thing happening. But now here it does the opposite. Here we have the ones responsible for a reversal. Understand? So now we have 3 touches, like I said. Remember, 3 touches. 1, 2, 3, boom. Understand? So remember, yeah, this thing is doing some kind of things, yeah, but I think you get the picture of what I'm trying to say. 3 touches. Let's see. Boom. That's exactly what I'm talking about. You see? 1, 2, 3. Yeah. From having the one with the continuation here. Continuation, major sell, a little bit of uptrend, continuation, a little bit of downtrend, breakout, up. You see, but overall, this movement here is a flag, and that other one is also responsible for the continuation of the trend of the sell. It shows that we continue with the sell, but this one immediately, when you see this one immediately, you knew that now we are buying. The buyers are involved, and then that's exactly what happened. The buyers started getting involved. Understand? But if you are also to look at it on a bigger scale, you realize that also the buyers, they're responsible for also another reversal, continuation flag. Understand? See, still continue down. But if you, like I said, if you were to look on smaller time frames, you see that like you get this kind of movements. Understand? You get this kind of movements. See, same thing. You see, boom. Understand? So these are the kind of movement you can expect. You see, I moved to a small time frame. Now I think you can see clearly. You see, that's what's happening now in the market now. This is currently just like 2 days ago. This is like 2 days ago. You record this, same thing. Understand? So now some people would think buyers are involved, but no. The overall trend, like if you were to see the overall trend is a sell. Hence I'm saying you must use bigger time frames to see the trend. The overall trend here, we come from a flat channel. Remember, we come from a flat channel. We come from a flat channel. We come from a flat channel, and we have a small downtrend here. If you were to look at it, we have a small downtrend here. But if you were to look at it on a bigger time frame, you realize that on a smaller time frame, in fact, you realize that this movement here is a full downtrend. But also on the same downtrend, you get this kind of patterns, or you can say, yeah, or you can say strategies, kind of, yeah. But here, this here shows you, see, these are trends within trends. Understand? Is it after a major sell, you have this kind of thing happening, but we are most likely, what is ought to happen here, we are most likely to see this happen, this kind of, I'll show you now. You see here, it might come back down. You might see this happening. Why? Because here, this here, it shows this overall movement is the one in charge. The sell movement is the one in charge. Understand? So we are most likely to keep going down. And remember this on your resistance, the top resistance. That's why the chart gets the momentum to go down. Understand? The support is where the chart get the momentum to go up. But now we are at the resistance, so we are most likely to go down from this point. So people are most likely we are most likely to sell the market here. Understand? Keep your stop loss simple, 20%, then boom. Understand? So you're most likely to sell from this point here. So that's the kind of things I'm trying to show you. So the same thing, ascending and descending flex. I'll show you now. You see, ascending and descending ones. You see, and like if you look this here is a flag. If you look at this properly, this is a flag, and it also shows you these are the ones responsible for the continuation of the market. I'll give you a quick example of what I'm talking about. Let's look for the ones with the buy. Some people call them like the market will retest, like it is a retest, then for the market to keep going up. Understand? Let's use a bigger time frame. Let's try H1. I want this perfect. The ones that are the ones responsible for continuation of the buy movement will do something like this, something like going down like this, then boom, continue up. Understand? So you will have this kind of movement happening before it goes up. Understand? So you have something like this, then boom, goes up. So that's what you're most likely to see. I'll give you a fair example. As you can see, like these ones, let me try to drop down to H4 to 30 minutes. Yeah, maybe you see them. Let me see 15. You see? Yeah, this one is perfect. You see? A full buy. Then this kind of movement, 1, 2, 3 on the downside, then boom, continue going up. As you see? You see? That's the kind of movement you can expect from flex, the ones responsible for continuation. Understand? These are the ones responsible for continuation of the market. That you know that okay, we do have a major buy. We do have a major buy, or our overall trend is a sell or a buy. Let's take a look at this. Like I said, now our overall trend is a sell because we come from a breakout of a flat channel. So now our overall trend is a sell. Understand? Our overall trend is a sell. But if you were to see also here on the M15, we have an uptrend, the one responsible for the continuation. So we are most likely to break this, have a movement to break out of this, then continue going up. So like I said, responsible for the continuation going down. Understand? Maybe it might go there, then boom, down. Understand? So this is what might happen. But if you are to get a closer look in this kind of trades, that's what you'll see. You'll get to see these patterns repeating themselves. You see this kind of Understand? You see, these are the ones responsible for the continuation. You see, some like pay attention to what the market shows you. Pay attention to what the market shows you, because it is very important for you to really understand what you are doing. Understand? So I expect you guys to keep on practicing. Send me your progress. Like, so you should send me your progress whenever you've made some analysis. You show me your progress. Man, this is what I see. Then I can correct you. But that's it for today, guys. Cheers. Until I think tomorrow I will continue with now. Then the next video will be about other blocks, candlestick movements, candlestick patterns, when to take trades, the best time to take trades. Yeah. Have a nice day, guys.